Okay, good. Let's start. We're going to use before I introduce myself, I would like just to explain why we're using the Academy City and not the Moodle. It's not because it's come to replace the Moodle, it just simply has a lot of features we cannot really do on Moodle. So I would like to just go and explain that so we remove that away. Let me open our model. Everybody see my screen, yeah? Okay, if you see in here, I said that the site we're going to use is Academy City. I put here the Zoom. We will be using the same link over the semester, and I gave some explanation here. Here I put a little video showing you how to sign up and how to register, okay? I'm going to show it, but just in case you will have it right in here. Let me explain why we're using Academy City. So if you click here, you get to academycity.org. Basically, it really is my website. Let me log out first. How do I sign up? Signing up, it's very simple. Signing up, you just click here. You write your email. I will write Amos 23 and at drbaranes.com. I'm going to use the user Amos 23. 23 is, by the way, the last 2 digits of your group course number. So, and I'm just going to put my password. And I will confirm. And I'm signed up. Okay. It's going to send me an email, blah, blah, blah. Let me sign out just in case. And usually you will be in this situation and you just log in. You just put your code and you log in. I don't think I'm making any things that you don't know. Now, why do you want to register for the course? If you click on courses, if you notice when you logged in, you have 2 more buttons here. If you click on courses, you get all the courses that I'm developing or I'm involved in. I'm just joining some other people. And if you go into the business, this is the course we're going to use, okay? If you don't register, you won't be able to see the simulation. So you need to click on register. It will open up the 2 groups that I'm teaching this semester. You belong to the second one. So you're supposed to click on this one. While if I click on this one, it will tell me your registration have been done, was successful. And if I click on here, it will take me to the content of the course. If I go back to the courses, sorry? Say again?
את הבננה, זה תרועה מחוררים אותה. לפני שהיא נרכבת אפילו.
Okay. Okay. If I go to courses, as I did here, I will go into business. You will notice after you register, you got a simulation, okay? This is a special button. And that's the reason why we're using this website, because there is a feature that you don't have really in another frameworks. and it's designed for this specific course. There's some more students are joining. Okay. If I click on simulation, that's really one of the special framework on teaching this course. I think we are the only one that worldwide have this kind of a simulation. And let me explain what it is. Let's say I want to do evaluation for a company. For example, Netflix, okay? I choose all companies. I don't remember which industry it is. If I know the industry, I can choose a specific industry, and then it shows me all of the companies on that industry. For now, I don't really remember which industry it belongs to, so I'm just going to type Netflix. Here we go. Type it. You see it's showing me the ticker, and then it's operating in United States. So I'm choosing United States, and I want to do evaluation for 2019. There's only one thing, and we'll learn over the course. Why do we need it? We need to put the major industries this company is in. For now, I would just put entertainment, but basically it could be others, and we'll learn over the course how do we handle it and how does it affect the evaluation. Basically, I'm done. You know, it's like ever since we're going to study almost in this course regarding intrinsic valuation, which I will explain in a minute what it means. You got evaluation, okay? This is the valuation. But moreover, as you type the name of the company, it's automatically uploaded all the data from the stock exchange. That's worth a lot for you as a student, going over the annual reports and pulling the numbers and knowing which numbers to pull. For my experience, it's extremely hard still in your stage of education. So that can help you a lot. So you're getting all the data. In case the company you have chosen missing some data, for example, this data is missing. We don't really need it for the valuation, but if you did need it, you could have typed it in, okay? And the beautiful thing is it will keep it. You see, it tells you, it keeps the data. So you can use it even if you close the simulation and you go back, that number will be there. Let me just close it. So that's extremely powerful tool. And let me show what it does. Everything that we will learn, our goal is to see what is the value of the company by the end of 2019. How much was it traded for? And we will learn during the semester to try to understand why there is a difference between the two. All those calculations were done here. And we will go and learn one by one. Cost of debt, cost of equity, and here it does it automatically for you. What is the return on invested capital? Shows you how it was calculated. Show you the effective tax rate, which we're going to use in the course. It really is a nice simulation, and you can look at other companies and get an idea how to value them. The valuation itself, here you get all the parameters that were estimated by the valuation, and then it does the forecast. Let me just get those guys joining us. And here you will have all the calculation, and then eventually we will learn how we do all those calculations and we get the value of the company. Last things, which is very important here, is if I want to get a range. You have learned in other courses, when you do sensitivity analysis, you do best case, worst case, and realistic case. Here, it does automatically 100,000 times scenarios, and it's generating a range of what might be the value of the company. And here we see it's between 60 to 100, okay? So in the best case, it's supposed to be 100. Still, we see it's trading almost 3 times more than that, and we'll try to explain that during the semester. Any questions so far? Why we're really using this one and not just a regular a course kind of a Moodle? Anyone questions? Questions? Clear?
Clear.
Clear.
Do you like
Yes,
this? Did you
crystal.
like the simulation, by the way?
Yes.
Yeah.
Oh, yeah, very nice.
Yeah, I
Very
believe that all courses supposed to be this way. Because I
Where
think,
is the syllabus for this course?
yeah, I'm gonna go over all of that. Don't worry about it.
Okay, thank you.
I'm just saying that my opinion is that people love to study by experience. When you study just theory and you don't see how it's applied, it's less good than if you see a simulation you can apply it with. So that's why I built up that simulation. Okay, let me go over where is the material for the course. As I said, you have here, let me go here. You can also, by the way, open another folder. You can open as many as you want. It's web application. So I'm going to courses. Usually I like to study, when you study, I strongly recommend you click on the picture, you get the material. So this is really all the material for the course. Here you have the simulation. Here you have the material. So for example, you can click here and you read this chapter and we'll go over that today, okay? You click on, by the way, you finish reading, I will ask you to read some material. You want to take a test, you click over here. This is an excellent way to study the material or review the material, and also excellent to prepare for the exam, okay? So, and I will add more questions as we go along. The beautiful part is you get immediate response. There's a question, and then you answer this one. It tells you this is the wrong answer. You click on the second one, it's the correct, and then you know what the correct. Many questions, I'm building them up in such a way there will be kind of a review for you for the material we will study, okay? So that's another thing you'll have. Somebody asked what is the syllabus? You know, I uploaded to the Moodle and I also put it here. You have a syllabus right here, okay? So I always put the two things. The only thing is about the grading, which you have. I don't think I put it here, but it's on the Moodle. No, it is here too. So I put everything right here. I will update even this page according to the assignments or to homework that I will give you. And let me explain. You go back.
I don't know why, but the syllabus on the Moodle, it doesn't download. I don't know why it's red.
I tell you what happened is originally they combined the two websites, I think, and then they split it and something went wrong over there. On any case, it's exactly as the one is here, okay?
Yes.
And I will double check what happened with the Moodle. It's supposed to be ready. The Moodle is the official website about the requirement. So I will make sure to check what's going on there, okay? Okay, another things, we have a book for the course. The book is right here. By the way, it's probably one of the best books that I know of. It's on the internet for free. You can download it. So to save your time, I put it here. When you click, it should download. I need to fix, I put it in a place that requires the password, but I will remove it. So by the end of the session, when you click here, you will be able to download the book, okay? It's really one of the best books by Mackenzie, and we will be using it. One of the assignments for this week is to read chapter 1, and it's written right here. But generally speaking, I will give you two types of homework / assignment. What's the difference? When I write assignment, it's a group assignment. When I write homework, let me find homework, it's individual work, okay? So this one you do individual, an assignment you do as a group. Homework, I usually like to put questions which will help you for the exam. Assignment, I'm going to explain now what's the objective and what it is. One of the requirements of the course is to write a paper. But from my experiences, you are very busy. So what I do is I split your paper over several assignments. So every couple of weeks, you will submit part of the paper, which is really an assignment. When you get to the end of the semester, you basically finish the paper because you already have done all the work. The last assignment is combining all the assignments and writing a conclusion for the paper. So it's splitting your paper over the semester. Questions so far? Okay, it's clear, the assignment.
שמע, התקשרו אליי מהאיירון סורס, הפתיעו אותי רצח. קשה, תפריע לעשות לי רעיון בטלפון.
Okay. Try to avoid it, guys. We are all listening here.
שמע, הפתיעו אותי רצח, רעיון ראשון שאלה אותי ספיות שכר. נכון, אתה מזהה?
Okay. Let me move on explaining. First of all, let me say a couple words about myself. I'm an economist. In fact, my PhD is in economics from the University of Chicago. I am also a CPA. And one of my favorite topics is valuation, merger and acquisitions. I worked in a very interesting company called Lexicon. Strongly recommend for you to look into it. But in the last several years, I think not several years, but over 20 years, I got interested in a topic of data science, and I'm combining the two fields together. And in fact, I use data science for developing special things in business. For example, the simulation, I wrote knowing a lot about computer design. This course I made for anyone that really wants to learn how a software is made. This one, how you handle data. Like in business intelligence, you're collecting data from everywhere. This one, algorithms. And this one, I still didn't develop it, but this is really for a PhD student more. It's called deep learning, and computer vision, but it's not really part of. I really strongly recommend whoever really wants to, for undergrad, to know how a software design, learning Python in a higher level, know what the database is, how a software structure should be in the right way. This is an excellent course. In my opinion, everyone should take it. Those ones are more specific, okay? I use this knowledge to develop stuff in business. As I said, corporate valuation is one of them. I'm building up now this software for MBA students. It's usually the last course. I teach that course in the University of Haifa. And now I'm building up my own software, which is a simulation how to manage a company. That's pretty cool. So anybody interested, let me know. This one is just financial statement analysis. I'm building up this course. A colleague of mine building up a strategy course. But this is really the stuff, and I'm going to add more courses, option trading, and all those stuff. By the way, did you study options?
Yes, we did.
Yes, just last semester.
Oh, wonderful. So Black and Schultz, you know already.
The other courses are live or recorded?
I'm recording, yeah. So I'm going to
there
upload
we
it after that. Yeah, I'm going to upload it so you will
And
have a reference, which will be good for you.
okay.
Okay. Now, by the way, if you look at my main page, by the way, it's really a mess here. Yeah, I didn't really have any time to think about how to organize it. But this one I added after the Corona started, and I realized people running to the stock exchange to buy stock after the decline. And I say, be careful, guys. here are two very smart people, Schultz and Milton. Both of them got a Nobel Prize. In fact, there are three, Blake, Schultz, and Milton. All the three got Nobel Prize. But those two guys have opened a trading company, in fact, more mutual fund, and they invested, they did extremely well up to a point that it totally collapsed. And they lost over $60 billion. And the lesson is, even if you are a Nobel Prize winner, it doesn't mean that you're going to be successful if you make mistakes. So, and when people running to invest in stocks they don't nothing about, most likely they're going to end up the same things. Those guys invested in a thing that has nothing to do with options, and that's the result, okay? So option valuation is a professional, extreme professional, and even within that professional, be very careful. Don't jump. Know what you do, and only then go and invest, okay? So that's why I put it here. I saw a lot of people running to the stock, and I hope I stopped some of them not to lose their money. Okay, let's go back to our course and what we're going to do. By the way, everyone knows how to register. Everyone knows how to sign up. Questions? Yes, I can hear you. Yes, I can hear you. Yeah?
Yeah.
Wonderful, good.
Yep.
By the way, the first thing that I put up here, I put my email. This is my email. That's my phone. So you can always reach me. The best way to reach me is to send me an email. And if you want to talk to me, best way is to say, I would like to talk to you. When is it a good time? And then I will set up time, so I will make myself available to you, okay? But that's what you can do. Okay? Good. By the way, somebody asked about the syllabus. If you notice, there's a blog here as well. You can communicate between yourself, guys. You can ask questions to somebody. Okay? This is a blog between all the other groups, not only your group, it's also other groups.
זה קורס של הבינלאומי, אז לדעתי הוא יהיה הרבה יותר קל מה שהיה להם.
Hello? Anybody talking to me?
בינתחומי לא יותר קל.
Okay. So you have also a blog which is intuitive in the right place. You can ask a question and other people can respond. I hope you take advantage of it and share information between yourself, okay? Okay. Let's start and see what we're going to study in this course.
איזה אנשים, דיברתי אחי מהבוקר עם אנשים כאילו קרישים. דיברתי עם איזה אחד בדירקטוריון של בנק לאומי.
Okay, sorry, I had to mute everyone because some people are speaking about something that has nothing to do with the course, so I apologize. Okay, what are we going to do in this course? We're going to focus on two main valuation methods, one called intrinsic valuation, and the other one is relative valuation, the most common method. I'm going to mention and talk a little bit about option pricing. I'll give some examples, but it's not the main focus of this course. Finally, we will talk about simulation. We use simulation to substantiate the results we get in those two valuation methods. Okay? Okay. I just showed you before when I went over here. When I go down here, in fact, I'm using simulation to generate and to learn what might be the range of what the price is supposed to be, okay? In a simulation, we'll see as we progress, I added here 6 more buttons for all the parameters that affecting valuation. And this is help us to find out which one is the most effective or affect the price of the interested valuation. For example, if I click on marginal tax rate, it's part that affect, but it's not the most crucial. Or see, it's telling me it should be between 80, I would say around 80 really, 79 to 81, while the price could be between those two. And there's other things that might affect it more. Okay, so that's simulation, and I will talk about it in the class.
There's people that are trying to get into the class.
Yeah, okay, let's see. Yeah, thank you.
Thank
you. Okay. Let's go back to our presentation. By the way, this is really our PowerPoint, I should say. If you have any comment, you need any help, please let me know. I will try to put most of the stuff here, many stuff. Instead of using Excel, it's already embedded here. I will show examples. Let me see if I can find, but we will find later on. Yeah, this is, for example, question from previous year's exam. Okay, I provide you with the solution, but not only provide you with the solution, it's you can change the parameter of the questions and you can automatically get the right answer. For example, if I assume that the total asset it's not 250,000, it's only 200, you change the number here, the whole solution changes automatically. This replaces the Excel, and you don't have to go to another place. It's right embedded inside your material. If you advise or you recommend that I will add some more material, I will be more than happy to do so, okay? But as I said before, if you look at the topics in the bottom here, it's really excellent, excellent, excellent book. For next week, I would like you to read first chapter. It's a really good introductory, open your eyes. There are some chapters that are a little harder. I will try to simplify them, and I even tell you to skip certain pages, okay? So let's start. But before that, any technical questions? Anybody has any technical question? Please raise it now so we can start. Anyone? Everyone is happy?
Yes, no technical issues.
Beautiful. Everyone knows how to find the assignment, the homework, and all of that. Beautiful.
Assignment is individual.
Homework is individual. Homework is individual. Assignment is for a group. And the objective of the group is so you're splitting your paper over the semester.
Paper.
Now, I don't give you a grade. I kind of comment if I see something totally wrong, I will comment on your assignment, but the final grade is based on the final paper you submit.
Final paper.
Exactly, the final paper. Okay? Good. So let's move on. Okay. Okay, let's start. As I said, we're going to deal with intrinsic valuation, relative, option pricing, and simulation. What's the difference? Okay, what is relative valuation? What is intrinsic valuation? Okay, when you think about it, okay, let's say you want to buy a house, how would you go about it? Anyone has any idea? When you buy a house, what do you usually do? Anyone to help?
Compare prices in the area.
Exactly right. You will say, okay, you go to your retail engine and you ask him, oh, can you give me a list of houses that were sold in my neighborhood, more or less similar to the one I'm interested in? And then you say, okay, if it was sold for such and such, a house is very similar. So let's say that's what I'm supposed to pay. That's called relative valuation. You're comparing your asset to similar assets with similar characteristics. Okay, intrinsic valuation, on the other hand, it tried to find what is really the essence of that asset. Let me explain in the house example. Instead of saying how much really similar, there's noise for some reason in the background. Can you please stop it? Okay, whoever is making noise, or close your microphone, or just, I don't know, stop it. Okay, thank you. Sorry about it. Okay, so in intrinsic valuation, I will approach the valuation of the house totally different. I would say, okay, how much rent can I get from the house per month? And then I'll say, okay, if I get, let's say, $5,000 or $3,000 a month, how much is really the net present value of it? I do the calculation, I get $500,000. So that will be the value of the house. The value in the market could be totally priced totally different. But over time, we kind of expecting the price of the house to be closer to the value we get in intrinsic valuation and not in the relative valuation. The reason is because when people in a hard time, the prices of the housing would go down. When the economy is booming, the prices of the houses went up, although nothing really changed with the house. Does that make sense, guys? Hello?
Yes.
It makes sense, yeah? Okay, good.
Yeah.
So if I were to ask you, which one would give me a better, not better, but would give me a price that's close to the market value? Intrinsic valuation or relative valuation? What will you say?
The relative valuation.
Correct.
Comparable.
Because, absolutely. Say if all the prices of the houses went up, I want to buy a house, probably I will compare it to the other houses. My price will be overpriced as well. On the other hand, if the economy goes down, I will pay less. I will offer less for the house I'm being interested in. So relative valuation is more close to a price, whereas valuation, okay, it is really telling me a little bit about the characteristic of the house, which might be a long-term valuation of what the value of that house will be, okay? Many times people will say, I'm doing intrinsic valuation, so I know what the value of the house, and if I see the market, it's very low, I will go and buy the house. Why will I buy the house? Because I believe that the market eventually will adjust itself to the intrinsic valuation. And that's one of the major reasons why people do valuation. They look at the price in the stock exchange, they see the price is too low. So, oh, this company is really worth much more, let's buy it. And then they are hoping that over time, the price in the stock exchange will adjust and then they will make money out of it. And you can do the vice versa. If you do intrinsic valuation and you got a low value, on the other hand, it's being traded on a very high price, then you go short. You learn the concept short in options, anybody?
Yeah, we have.
Okay, so you go short, you will make money by the fact that the price goes down, okay? So you use valuation in order to know if to invest in something because it's overpriced in the market or it's underpriced in the market. One tricky questions that sometimes I put in the exam, if I were to ask you, you did the analysis, you find out that the intrinsic valuation is 200,000, but it's being traded for 50,000. That means it's really traded low. Will you run and invest, or you will think about something? And what is it? Anybody?
I guess that if the company is traded at a quarter of my analysis price, I would assume that there's more underlining assumptions that maybe I have didn't account into my analysis. It's
that's a
quarter of the
wonderful.
price of it.
That's excellent. So that means you go and check your numbers 100 times. You're absolutely right, and that's really what you should do. After, let's say you have done it, and you say, yeah, I'm still confident that my valuation was good, that it is really 200 and the price is being traded too low. My first instinct will be, yeah, let's just buy that because it's supposed to go up to 200. But if you're dealing in industry that the prices don't change too fast, what will you do now? Let's say you have a limited, you have money, but you might need it another 3 months from now. Your investment horizon is only 3 months, and you cannot hold too long. And you arrive to a conclusion that the market don't adjust itself too fast. Will you still invest or not?
No, this doesn't sound like a good investment given my current status.
Correct, absolutely right. Because if you had the time to wait, then you definitely should go for it. But if you need the money in 3 months, and the price might even go down before it goes up, and you will have to leave or sell the stock when you need the money, then you're not going to invest in it, would you? Anyone?
Can you repeat the question?
Yeah, I'm saying I have 50,000 today, okay? But I might need it in 3 months from now for something really important. And if I buy those stock and I would have to sell it in 3 months, it might be not a good idea. Why? If the price won't go up to 200 in 3 months, but it's really required like 2 years until it's adjust the price, it would be a stupid investment, won't be?
Correct. Yes.
Because
I don't know, not necessarily. If you invested in 3 months, it only came up by $1 per share. It's still a good investment. It's just not as good as if you have waited 2 years.
you're absolutely right. But what about if it's fluctuating?
Opportunity costs are.
And if it goes down by $2, then I
Then
even
obviously
lost
that's
the
a bad
$2.
investment.
You're right. So you're absolutely right. If there's a chance that it only will go up, you know, from 50 to 51, it's not a bad investment for 3 months, those are days. But if I don't really know, it might even go down before it goes up. I'm definitely know that it's going to go up, but I just don't know when. And the when is also important for investors, okay? If I am a big investment bank, okay, I can hold even for 2 years, I definitely will go and buy it. But if I'm a small investor and I might need the money, I would have to take that into consideration. Let's put it in this way. Does that make sense? Okay. I would like to ask a question that I always like when I start a course like that. If we were in a, usually it's the first time I'm teaching it on the Zoom really, but if I were to ask you in your room, wherever you're sitting now, what is the most important asset in the place you are sitting now?
The education that we're receiving.
Well, I knew you would say that. What is more important? It's very important, by the way,
Probably
more important
my
than
body. My body
Internet.
allows me to sustain life.
internet.
Same-
It's important. Your body definitely very important. But what is the what do you really need in order for your body not to die? God forbid.
H2O.
Oxygen.
Oxygen, beautiful. You need air. Is that right? So is the air is the most important things in the room. How come you're not paying for it right now?
Because plants and algae, and they worked really hard for billions of years, and we can reap the rewards of their hard work.
Because
what?
of
For
scarcity.
The air? Nobody have done anything to have air. The tree is making the oxygen.
Also,
So you're sitting in the room. You're sitting in the room, consuming the most valuable things, and the value of it really it's zero. You're not paying anything.
It's because of scarcity.
No, yeah, I know you took a class in economics, don't you?
It's a common resource.
Oh, hold a second. But how about if I take you and I put you under the water? How much you gonna pay then?
Priceless.
Oh,
No
beautiful.
deal.
So here is the paradox. If I ask what is the value of air, what will you tell me now?
It's valueless.
But you're not paying anything now when you're consuming it. So it's zero. So it's between 0 to infinity. And then I tell you what I would answer. That my question was not asked in the right way. I was cheating. A complete question should have been, what is the value in the room? Then you can tell me it's 0. And I should have asked, what is the value of air under the water? And then you will say it's infinity. By asking what is the value of air, it is not a complete question. Because to answer a value, you must give me in which context are you asking me. And that's a very important lesson from this simple example. You know, now Zoom prices, okay, went up to the sky, isn't it?
Yeah.
And why is that? Because the contents have changed. 2 years ago, nobody really needed the Zoom so badly. So the price of Zoom was whatever it was. Now it jumped. Why did it jump? Nothing in the Zoom changed, but the context have changed. And what do we learn from that about companies? I apologize really for mentioning again. I put a mute, but I want to hear your participation. So I really ask, make me a favor if you can avoid or close your microphone if you need to talk. I would really appreciate it. Thank you. Okay, so what we learn about that, when we ask what is the value of a share in Amazon, is that a complete question or it is not?
Incomplete.
Very good. It's incomplete. How will you make it more complete? Anybody wants to help or you can answer that? How will you make it more complete?
Well, as of now, what you've said, it's according to a time frame.
Exactly. Beautiful. What is the value of Amazon stock price today? Is that right? What is it, the value of Amazon last year? And we will see it's different. It's supposed to be different because the world is dynamic and things are changing. Let me give you another example, by the way. Let me ask that question. This is really a beautiful question to open your eyes and realize that valuation is really one of the challenging and also the most rewarding field to go into. As I mentioned before, I work for a company called Lexicon. I used to do valuation for litigation. I have done beautiful stuff since then. I did then and since then in that field. But let me give you another question. Let's say I tell you there is a a land in North Minnesota, extremely cold. Nobody wants to live there. Nobody has a reason to buy a land there. And I tell you that there is 100 acres that have gold under the ground, but it's too expensive to dig it. Meaning, if an ounces of a gold, let's say it's $1,500, to dig it, it costs $3,000. Will you buy the land or you won't buy the land?
Won't buy it.
You will not. Why you won't buy it?
It's too expensive. I will lose money. Will lose.
Absolutely right. Anybody can think about an idea, but let me tell you a fact. There is a land like that. I think it's a company called OMI. I haven't followed that for a while, but when I was following them, they didn't have anything beside a piece of land. And they had gold, and digging the gold is too expensive, yet it was traded in the stock exchange for over $1 billion. And they never digged even 1 ounce out of the ground. How would you explain that now? Why people would be willing to pay $1 billion on something you get nothing because it's too expensive to dig it?
Is it
Because
possible that it's
technology
only...
is moving. Sorry.
Say
No,
again?
you go, Sasha. You said what I wanted to say.
Go ahead.
Yeah, I'm saying that technology is actually moving. So people are believing that in the future, we will have the technology to dig for...
Beautiful, beautiful. That's a beautiful answer. Because what you're saying is, Amos, according to the context today, according to the situation today, it doesn't have value. But the value also depends on what might be tomorrow. And tomorrow, the context can change, which will bring a huge amount of value to this land. So people willing to pay today on the probability that the context will change in such a way that tomorrow I will have a big value. Everybody got it? Does that make sense?
Capiche.
Now, if I were a tricky person or tricky professor, and I tell you, if actually technology will happen, do you think the land will be worth more than $1 billion? If today it's worth $1 billion?
No, because they already take it into account when the stock goes up before, because they think that actually it will be that technology.
So you're saying it's already included in the billion?
Yeah, maybe.
Anybody disagree or agree? Anybody agree? Anybody
I think actually otherwise. Right now, this is just raw potential they're taking into the account. They're not fully taking into the account the futuristic value of the land. So once the system to extract the gold at a minimum price will hit the market, a much bigger industry could be built upon this that foundation.
Beautiful.
Making it much more valuable.
Okay, let's combine the whole thing. Beautiful. Say, today I'm willing to pay $1 billion because of the probability. Let's say the probability it's only 50% that they will find technology that I can dig with a cheaper price. Okay? And 50%, there's no way they will ever find technology like that. So I'm paying $1 billion today for the 50% probability. Is that right? So it's better off, it will be at least 2 billion to compensate me on the other 50%, correct? So if I play with you a game on flipping a coin, okay? And you might lose, let's say $10 if it's a head, and you'll make $20 if it's a tail, okay? 0 or 20, 50%, 50%. How much will you be willing to pay me for the game, to play the game, if you went to Vegas? if it's a fair price, you know, Vegas give you a fair game. You'll be willing to pay top $10, is that right? Because you might lose your money. Does that make sense, guys?
Yes.
Okay. If I'm willing to pay $10 today, the game, if the game saying that I have 50% chance to lose the $10, I should pay you at least $20 if you win. Otherwise, I'm not compensating you enough. So if the land today, and by the way, it's a real case, there's a real company that owns a land that's worth more than $1 billion just for holding that land. And it's traded for about $1 billion. They're probably expecting to make much more than $1 billion if a technology would come out, okay? Because they are taking the risk they might lose the whole $1 billion. And they need to be compensated for that. By the way, this thing that I just opened up now, that belongs to a valuation that belongs to real options. I call it options here, but the real name is real option pricing. And that's a whole field. I will open the door a little bit during this course. I won't dive to it too much. It's an advanced course. You need to know options very well. And if we get there, if we'll see. In any case, I will spend some time during the semester, toward the end of the semester, as much as we finish. But that's really fascinating topic, and strongly recommend to use that. By the way, just for last question, when you studied option, did you also use simulation to estimate options, or you just learned Black and Scholes?
Yeah, we use Monte Carlo simulation.
Oh, wonderful. So you did like Monte Carlo to estimate different type of options?
Exactly.
That's wonderful. That's good. Okay, good. So we will use simulation to find range of a stock. Okay, if we have time toward the end of the semester, I will talk about another startup that I have about arbitrage option trading in that I have. It's a software that is working beautifully, and we have time, I will expand on that. And we use a lot of simulation there. Okay, good. Let me increase the screen here so you can see it a little better. Okay. What do you think about this one? I thought that this is really cool, and that's why I put it here. Okay, it's from the book, by the way, of McKinsey. The guiding principle of business value creation is refreshingly simple construct. What does that mean? Companies that grow and earn a return on capital that exceeds their cost of capital create value. Why? It's so complicated. So let's break it down, okay? Who is creating value? Companies that grow. Is that enough to grow, by the way? If you see a company growing, are they creating value? Anybody?
Yeah, if they're growing, it's probably because they're creating value.
How about if I tell you, you have a little shop and you're selling ice cream, okay? Only ice cream. You're buying the ice cream for $5 and you're selling it for $4. You're losing money, is that right?
Yes, I am currently losing money.
Exactly. So if you have a rich father or rich mother or rich uncle or rich grandmother, whatever, and they don't care, they give you more money to buy more ice cream. So you're growing, but you're losing money.
Under that business model, yeah, for sure.
Exactly.
Growth doesn't
So
necessarily
growth,
mean.
exactly. So growth by itself, it's not enough. If you have a losing business and you're raising more money to grow, you're really destroying the money. You're not really, you are destroying value. You're not creating value. So growth by itself, it's not enough. You must have the second condition that the return on capital, that means, let's say the price of the ice cream you're selling, must be more than the cost of capital. That means if it costs me $4 and I'm selling in $5, I'm making money. But if I'm buying in 5 and selling in 4, I'm losing money. So if I'm making money, growth will make it even more. Does that make more sense now?
Yeah, for sure.
Exactly. So if you're buying in $4 and selling at 5, and your grandparents or whoever giving you more money because they're seeing you're making money, by growth, you will create even more value. Does that make sense now? Is that right?
Yeah.
So that's really what this statement is saying. It just sounds a little more complicated. But the bottom line is, in order for growth to create more value, you must be profitable. If you are not profitable, growth will not create value. That's really the lesson from this simple slide. Okay, this one we went over. I just wanted to emphasize maybe that this one we went over, but what is that? We want to distinguish between value to a price. We made that by talking about relative valuation and talking about intrinsic valuation. In relative valuation, we're more close to the price, and intrinsic valuation, we're more close to the value we believe that asset might have for over time, okay? And now let's see what might be wrong in valuation. And frankly, a lot of people think valuation is only about crunching numbers, and then let's see it like you saw my valuation simulation. I only showed you numbers, but the truth of the matter, there's a lot of judgment we will need to do according to what industry we are dealing and a lot of other parameters. And this slide came to say that we need to be really careful. Before we run into the numbers, we better off understand the company. We should really be knowing what the company does, in which industry it's operating, what is its strategy. And let me give you an example, and I would like to hear your opinion. Everybody knows Alibaba, and everybody knows Amazon. Am I right, guys? Everybody knows those two companies?
Yeah.
Beautiful. Anybody can tell me what's the difference between them and what's common in both of them?
One is run by a Chinese dictatorship, basically, and the other is an American company.
Yeah, that's the easy part. I knew you would know that. Let's dive into beautiful.
One of them is run by an American dictatorship. Yale.
God bless freedom, though.
Yeah, but let's go above that. You know, let's pass that stage. Although I agree with you, that one by itself has a lot of meaning, by the way. But let's go strategically. Anybody know strategically what's the major difference between those two companies? By the way, Amazon has also the Amazon Web Services, don't they?
Yeah, they make a lot of money every year off that.
In fact, this is the only segment they're making money off. And how about Alibaba? Does Alibaba has the same segment?
Probably, they probably copied it by now.
Yeah, you're right. But basically, they don't yet, at least as far as I know. They don't have that one. So they're not really the same company. Secondly, let's even put that segment aside. How about the strategy about, you know, delivery to customers? If you notice, Amazon they have at least 4 that I know of, warehouses, huge warehouses in the US. And they put it as a strategic policy to deliver as fast as possible to the customer. And that's why they have warehouses in several places in the US. So the buying from the supplier, the storing it in their warehouse, And if you're ordering a computer, it might come from the warehouse. And that will be much faster than asking the supplier to deliver it to you. On the other hand, Alibaba does not have any warehouses. It might be the delivery time is shorter, but they're saving the cost of storage. That's a very important distinguish, isn't it? What do you think? Anybody? Hello? How about everybody turn on his video? So we'll wake up, all of us, including me. Hi, guys.
Hey.
I have to tell you a story, true story, by the way. I taught a class in Nigeria. And why don't I see the videos? What happened? Oh. Where's the videos? Everybody, can you turn on the videos? Hi, everyone. Can you see me?
Hola.
Can you see me, guys?
Yeah, we can see you.
Why? I don't know. I lost yours.
Where you Amos?
Where is it? Yeah.
Amos, we only see part of your face.
Which one? The top one or the ugly one?
The top.
Now it's better?
Now we only see the top.
Now you see only the top. Now you see the more ugly part? I don't see myself. I don't know. I kind of lost. Hold a second. Okay. Okay. Yeah, I see it now. Okay. And I see everybody now. Okay, good. You doing good, guys?
Yeah.
Yeah.
Some people putting a picture. Yeah.
They're cheating.
No, they shouldn't. I'll be honest with you. In my opinion, it's the most important course probably most likely you'll take in your career in undergrad. There's a lot of company looking for really good ones. There's a lot of bad valuation people, but the good one can get a beautiful job. I have a lot of students in New York, in Chicago, Los Angeles. They're doing extremely well, mostly Chicago and New York. But it's a beautiful professional. You can go into, you name it. Say, I worked mostly in valuation for litigation. I wish really a good student that will ask for a recommendation for me, but you have to be really good. If you can make it to Lexicon or Charles River or Analyst Group, those are companies that are looking for extremely good ones, and you get rewarded big time. And after that, you definitely will get into one of the big, one of the best 10 companies in the US. So I strongly recommend you listen to those sessions. I will try to be as practical as possible because I'm coming from the practice as far as, and also as theoreticians. So I strongly recommend. It's only an hour and a half. Use it to the best. Okay, now we can go to sleep again. We turn off the video so you can hear me better. Good. Let's continue. Okay, in valuation, by the way, there's so many things. I just gave one example about Amazon and Alibaba. And when I do evaluation, I better know what makes the difference between them. 3 years ago, a little more, now it's 4 years ago, I took Teva, and I might show it to you as well, and I did evaluation for Teva before it collapsed. Anybody know the story about Teva in Israel? Anybody?
Yeah,
Israel,
yeah,
but
we've heard about it.
He bought something that has something to do with the opioid crisis. So they
Exactly. So I did valuation in the first semester, and it was in the second semester, but it was before the collapse. And according to my valuation that I'm going to teach you in this course, I got -$4, and I didn't believe myself, believe it or not. Neither did the student believe me. And But the funny thing is between the last session and the exam time, the stock price collapsed. And the students were happy at least that they studied the right stuff. And if we have time, I will see, I might show you the valuation for Teva. And I also will explain how does it affect valuation of options of company in a crisis. Extremely interesting, very, very interesting. So we're really learning stuff that they are very valuable in real life. I hope we'll have time, I will show you that valuation, okay? So, and how did I come up, or why was I successful to find out the value of Teva? It was very simple, you won't believe me. I even went and I read the constitution of India, what it has to do with Teva. I don't know how many of you know, India became to be what is known as the pharmacy of the world. They don't respect patents that have effect on a lot of people. But since India is such a huge country, a lot of patents that coming to renew, they don't renew or they don't accept even if they're renewed in the US. And therefore, it affects the prices of generic drugs. And that was one of the conclusions, one of the effects that affected my valuation for Teva. Okay? So that's just to teach you how important is the slide we're just seeing now. And one of the things, it won't be this week, but at least for next week, I will ask you to pick up, I think this week you will pick up a company, and then I will ask you to do a SWOT analysis. If you already have a company that is traded in the US and you did already a SWOT analysis on it, I allow you to use that company, okay? I'm not trying to be hard on you to try, I rather you spend your time on studying valuation and not just do the analysis for SWOT. But SWOT analysis, Porter model, and all those model of strategy, extremely important to start to learn about the company before you go into the number crunching, okay? That's the objective of this one. Okay, the last one in this part, I wanted to, in fact, we talked about those two. I just wanted to re-emphasize that intrinsic valuation makes some assumption. And the assumption in intrinsic valuation is that the market might make mistakes, but it's correct itself over time. We talked about it. Relative valuation, it's right on average, but it might be wrong on a specific asset. What do I mean by that? Remember in the example of the house, if I want to know what the value of the house is supposed to be, I will take, let's say 4, 5, 6 similar houses in my neighborhood, and I will take the average. So the average will be more or less correct, but the average is not the right price for either of them, because they all can be very different than that. So relative valuation gives you kind of, on average, the right number, but it can be wrong for a specific individual asset. So far, any questions before I move to the next topic, which is going to be extremely important? Anyone? Anyone? Questions? What is my telephone number, guys? Anyone knows my telephone number?
054-427-9186.
Beautiful. It's right here. Is that right?
I already memorized it.
Good. Well, the next topic, and before we dive into the heavy stuff, we'll do some review. And this is one I kind of summarized, the stuff that I think you should know in accounting. You definitely should know some in finance, and I will go over that when we get there. And you should definitely know some statistics. We'll talk about it slightly. But the most important thing is in accounting. Now, I am a CPA myself, but believe me, I feel like the way you do about accounting is the most boring topic. But fortunately or unfortunately, it's one of the most important topics you really have to have. And to make your life easy, whoever really wants to see a good book, where did I put it? I think I put it maybe here. Sorry. I put at the very bottom a link to extremely good book. It's not mine. I know this guy for several years, many years. This is free. He made a beautiful book on accounting. I don't know if you use that when you studied accounting. From 1 to 6 to 14, it's accounting. 15 to 16, it's kind of a review on financial statement analysis. And 17 to 24, it's managerial accounting. This one we don't really need, but this one I really strong recommend if you feel like you're weak, even if not for this course, do it for yourself. If you want to be a good manager, you have no choice. You really have to know accounting. I hate accounting as much as you do, but I do it with a lot of passion just because I know how important it is. So whoever wants, there's a link to a really good book, okay? And I'm gonna cover things that I think that it's necessary for this course. I will start today. Whatever I want finish, we'll continue next time. So one of you, please make me a favor. In 10 minutes, 5 minutes before we ending this session, ask me to stop. I want to make clear that you know what you need for next week, okay? So I will spend the 10 minutes talking about accounting. I will stop where we get, and then we'll continue next time. What do we have in accounting? We have 3 major financial statements. In the US, they call them 3. It's the balance sheet, income statement, and statement of cash flow. In Israel, they make it like 4, and in the US, the 4th one, they call it a schedule. It's a change in equity, okay? So I like the American style because it really is not supposed to be a statement. The truth of the matter, if you ask me, you really have only 2. The 3rd one, it's derived from the first one. And what do I mean by that statement? It sounds like very strange. If we look at the balance sheets, we have assets, we have liabilities, and we have equity, okay? Then I will show you the link between balance sheet to statement of cash flow, and the statement I just made before will be much clearer. But before that, if I were to ask you how much you worth, anybody wants to answer that question? If I ask you, one of you, how would you go about it? How would you answer the question? Anybody?
A human life is worth around $10 million.
No. That one, it's valueless, okay? It's endless, you know? I'm talking about, let's say, financially, okay? If I were to ask you, how much really you're worth financially, you know, regarding assets and all of that stuff, how would you go about it? What do you do? What you tell me? I have a car, you might have a car, you might have a house.
Asset, do you own a house? If yes, how much is the house? The price of it? If you have equipment, what is the price of it? And,
exactly.
Do like a financial statement like we have here.
Exactly. If you have a mortgage, then you subtract from it. Is that right? You took a loan, you subtract. And then the net, it's really how much you worth. Is that what the balance sheet does? See, we have assets, we subtract liabilities, we get equity. Is that correct? Or there is difference between my previous question and the balance sheet? So the difference is, in a balance sheet, we measure according to a book value. We measure according to how much we actually paid. If the prices change over time, we don't take it into account. in my previous question, if I ask you how much do you worth, and you say I have a house, the house worth 5 million, but you might have bought it for 2 million, is that right? So we distinguish between market value to a book value. And the financial statements, we only deal with book value. So if I look at the total assets at 2010, the total assets will be 810,000. This is the book value. Maybe the assets worth much more in real life, but according to the financial statements, we only record the book value that we paid. About the liability, the same things, and then the difference will give me the book value of how much I am worth, but in a book value. Okay? So when we look at the equity, we have two numbers. Anybody knows the difference? By the way, there's a misspelling here. It should be retain, it should be AI, or, okay, so this is misspelled, I will fix it. Anybody knows the difference between common stock and retained earnings? Anybody? Anybody know? Hello?
In the past, while we're taking fundamentals of accounting, I might have been able to answer this. Now, a year and a half after?
No problem, so I will review that, okay? The common stock, it's the amount that the company raised. What does it mean, raised? It means that the company needs money to operate. So they're coming to the stock to people and they said, okay, we'll give you shares and you contribute money to the company. So the 50,000, it's the amount of money the company have raised to start their operation. On the other hand, retained earning, it's how much money the company have made as a profit since it's established, minus the dividend they have distributed since it was established. So let me repeat that because it's very important, okay? Common stock is how much money the company have raised when it was established, or it raised from the shareholders. They gave them stock and the shareholders gave the money to the company. That's common stock. Then we have retained earning. Retained earning, it's how much profit the company have made since it was established until 2010, the end of 2010. They have made profit of such and such, and from that amount they distributed dividend, and how much is the net? It's 128,000. So far so good, everybody? Hello?
Yes.
Okay. Yes. Anybody wants to say what is the 170? Anybody want to say in the same language I just said it?
That's the amount that the company did from the day that it opened, minus all the dividends that it has distributed.
Beautiful. So 170 is the total of profit the company have made minus the dividend they distributed over the years since it was established. Beautiful. Now, if I were to ask you, what is the difference? How would you describe the difference between 170,000 to the 128,000? How would you describe that? It becomes to be like 42. How would you describe the 42?
Well, there's plenty of different methods that can
That's the definition we had.
Explain this.
I will help you out. We said the 128,000, it's the total profit since the company was established minus the total dividend. The 170, it's the same things, just for up to the year of 2011. Therefore, the difference between the 170,000 and the 128 must be equal to what?
The dividends they paid out.
The money reinvested in the company.
Beautiful. 1 year, beautiful. It's only the profit on that year, 2011, minus the dividend that we distributed in 2011. Does that make sense? So between 128,000 to the 170, the difference is the profit for the year minus the dividend we distributed that year. That gives me the difference between 170 to 128. Everybody got it? Yes. Hello?
Yes.
Yeah, we're here.
Beautiful. So now let's look at the income statement. Okay? In the income statement, I look at the year 2011. I made net income 101, 250. And now I'm trying to figure out how much dividend the company have distributed that year. And that becomes to be a little easier. Why? I know that the 128 up to the 170, it's come because to the 128, I have to add the profit of the year. To the 128,000, I will add the profit for the year. I have to subtract the dividend, and that has to be equal to the 170,000. Does that make sense?
Yes.
So
Sorry,
can
could
we
you
find
repeat
the
that?
dividend? Can we find the dividend?
Sorry, Amos, could you repeat the
Yes.
last explanation?
Yes, I'm going to open the Excel also, just for showing the calculation. And then you have to stop me right after that, because I want to make sure that we know what we're doing for what you need to do for next week, okay? Okay, here we go. The retained earning, I usually write retained earning like that, just a short. We have for 2010, it was 128,000. Everybody agree, yeah? That's what we took from the balance sheet. To that one, I have to add net income. The net income for the year, I find in the income statement, it's 101, 250. So far, so good. Then I subtract dividend. And how much dividend? I don't really know. Is that right? By the way, I didn't like my minus here.
Can I ask a question?
Sure, definitely.
The 101,000 is for 2011, but you took the retained earnings for 2010.
Correct. I started from retained earning beginning of the year. That's 2000. That's for 2010. And I want to arrive to retained earning. Let me write it here, 2011. Let me write it better this way. Okay, does that make sense now?
Yes, I think I understand.
Okay, good. So let me just make sure I'm writing it, okay? Now, we know this number. We know that this is 170. Can I find the dividend? Because the 170 supposed to be this plus the retained earning beginning of the year plus the profit of the year minus the dividend supposed to give me the 170. Correct?
Correct.
Okay, so if I go backward now, okay, I see this plus this minus this equal to this one. Okay, so I can take this plus this minus this will give me this one. So this one, let's do it this way, okay? Plus the 128
Equals.
plus the 101 minus whatever it's in the end. That's supposed to be the dividend. Does that make sense?
Yes.
Okay? It's just like that. This plus this minus this gives me this. So if I do this plus this minus this should give me this one. Okay? All you don't really have to memorize that, only to really understand what's the difference between those two numbers. The difference between those two numbers is the net income of the year minus the dividend of that year. That's the difference between those two numbers. If you remember that one, all the rest it's easy, just calculation. But the concept is 170 minus 128 equal to the net income minus the dividend for that year. Does that make sense, guys?
Yeah,
Question?
it does.
Beautiful. Okay, I think we'll stop here. We will continue for next week talking about statement of cash flow. It's extremely important. I will talk about how accountants look at it, how we as a finance people and as a valuation people look at it, and we'll continue from there. What do I want you to do for next week? Okay, stage number 1 is just look at the assignment. Basically, pick up a group of 3 to 4, recommend 3, okay? I will allow you only to put 3, and in a minute I will show you how you do that, okay? And I will upload a video to the Moodle, how you join a group, okay? Or how you structure a group, okay? I will upload a video how to do that. And, okay, so you'll have a team, and after you have a team, you have to pick up a company. You can pick up any company from here. Those ones, most of them, you will have the data in my simulation. If you don't have the data in my simulation, I strongly recommend don't use that company. You don't want to waste a lot of your time digging numbers from financial statements. Moreover, if you like a company which is not in the list here we have only 100. In my simulation, you have almost 3,700. So you have a lot of companies. You can pick up also another company for my simulation. That will be just fine, okay? The valuation you're going to do in a group. So please pick up a company, form a group, okay? And I will show you in a minute how you enter the group to the simulation. I will upload a video showing how to do that, okay? That's one thing. Second thing, I would like you to read, please, chapter 1 of the valuation, okay, from this book. It's an excellent. Third is go over in your free time. Here I'm building up the take the test. Just review that. I will add more questions, by the way, okay? I will add more questions. This is excellent preparation for the exam. Don't wait to the end of the semester. Do it on a weekly or bi-weekly or 3 weeks, according to what our progress. This is excellent material for you to prepare for the exam, okay? Can I steal 1 more minute, or you have another class to go to? Hello?
One more minute is fine. Yeah, 1 more minute.
1 more minute. Okay. Let me show you. I will log out. I will log. Am I as a student? Yeah, I'm a student. Okay. I logged in. My user is Amos13. It's Amos and the 2 numbers in your group number. How do I register to a group? Go to my account. And by the way, you have a profile. Please do fill it up. At least, fill your name. Amos Baranis. It's the most important is your name. The rest is less. Put your email you put when you log in. So if I send an email many times, I send from this system. But I have your email in another. You want to put your picture, you're more than welcome. You don't have to. You want to put your bio, you can put, you don't have to. All the rest is not mandatory. Please do put the institution. I study in Chicago, so I put Chicago, but you should put IDC. Update, and you're done with this one, okay? Then after you do this one, let me go back to the account, and I go to management and my courses. If you notice, I register to the course. It gives me the name of the course. If I click here, it will take me to the course. If I click here, it will take me to the simulation. This one allows me to join a team. So if I click here, the first one says everything is empty. Is that right? I can click add me to a new team. Okay, and it tells me you was successful. I am in a new team. If I click it again, it will show me that I am in a team 1. Everybody got it? Everybody, yeah? The first one, you add a new team. Now, if you want to join this team, by the way, okay, now there's only me. If somebody else log in, you will see you can add me to this team. If you want a new team, you click on this one. If I log as a different user, then it will say a different thing. Let me log as a different user for 1 second, and then we will be done. Yeah, but I'm not registered. I need to be registered. No, I don't want to register. Yeah, let me try that. I will cheat, and then I will delete myself. Let me go to my account, and I go to management. I go into here, and I go to here, and there is several teams. You see that? Because this is a different group. You got it? This is totally different team. You see, it's not your course, okay? If I want to add myself into this one, I click add me to. Then I'm joining this one. You see, my name is right here. It should be here, okay? If I want to change a team, I click here, and then it will move me from here to there. I didn't put my name, so I should really put my name, and then it will show up. I probably didn't put my name here. Let me put Amos. That's why it's important that you can see. And let me go back, and I will be just fine. And here we go, you see my name. If I want to move to this group, okay, I just click here. It tells me your registration is fine. I re-click here, it will refresh, and you see it moved here. So if you want to move a team, okay, you just click on the title. If a team is already closed, that means you're passing 3 students. For example, here I cannot join. Nobody else can join here because there is already the maximum of 3, okay? But any group that has less than 3, it will allow you to switch or join. If you want a new group, you click here, add a new, and then I will be by myself. If you go back to the bottom, you see I'm by myself, and someone else can join me. Is that clear, guys? Hello?
Yes.
Good.
Clear.
I will upload that one to the website, and good luck, okay?
Thank you.
See you next week. Please don't hesitate to send me an email if you have questions. You want to talk to me, send me an email, and we schedule a time, and I'll be more than happy to help you. Good luck, guys.
Thank you.
Take care. Bye.
Thank you.